You know that feeling when you're running harder and harder on a treadmill, but somehow the finish line keeps moving further away? Welcome to the greatest magic show on earth, where governments have perfected the art of picking your pocket while convincing you it's for your own good. Today, we're diving into the 10 most elegant ways your friendly neighborhood government has figured out how to keep you broke, stressed, and grateful for the privilege. But before we start this cheerful journey through institutional theft, let me paint you a picture. It's 2025, and somewhere right now, a 25-year-old is sitting at their kitchen table, calculator in hand, trying to figure out how they're supposed to afford rent next month despite working 2 jobs. Their paycheck looks decent on paper, but somehow it buys less than their parents' smaller paycheck did 20 years ago. They're paying into a retirement system that probably won't exist when they need it, carrying student debt that will outlive them, and living in a country where carrying too much cash makes them a criminal suspect. This isn't an accident. This isn't bad luck. This is a system working exactly as designed. If you want someone to translate these tricks into plain language so you can stop being an accidental target and start seeing how the game is rigged, hit subscribe to Chill Financial Disasters and stick around. So buckle up, because we're about to take a guided tour through the funhouse mirror of modern economics, where up is down, theft is protection, and the house always wins because the house literally writes the rules. Let's start with the most elegant scam of them all: the invisible tax you pay every single day. Picture this. You've got $100 in your wallet today. Congratulations, by next year, that same $100 will buy you what $93 bought you today. The year after that, maybe $87 worth. But here's the beautiful part. Nobody raised your taxes. Nobody sent you a bill. Nobody even told you they were reaching into your pocket. Welcome to inflation, the government's favorite parlor trick. After the 2008 financial crisis, and again during the pandemic, central banks around the world fired up their money printers like they were competing in some kind of global confetti championship. They called it quantitative easing, which sounds so much more professional than creating money out of thin air to solve problems we created by creating money out of thin air. When you flood an economy with new cash, basic math kicks in. More dollars chasing the same goods means each dollar is worth less. But here's where it gets truly diabolical. The government gets to pay back its massive debts with these newly minted, freshly devalued dollars. They borrowed real money when it was worth something, and they're paying it back with monopoly money. Meanwhile, if you own stocks, real estate, or fine art, you're watching your wealth explode because those assets get more expensive in dollar terms. But if you're a normal person with a job and a savings account, you're getting quietly mugged by mathematics. The lesson here is brutal but simple. Cash isn't king, it's a melting ice cube. They don't need to raise your taxes when they can just make your existing money worth less. They create it, spend it first when it's valuable, and by the time it trickles down to your paycheck, it's already lost half its purchasing power. It's the most widespread, effective, and misunderstood tax in human history. Moving right along to our next masterpiece: civil asset forfeiture, or as I like to call it, guilty until proven innocent, but only for your money. Picture this scenario. You just sold your car for $10,000 cash because you're buying a new one. You're driving to the dealership when you get pulled over for a broken taillight. The officer sees the cash, decides it looks suspicious, and seizes it. Not you, just the money. You're not arrested. You're not charged with a crime, but your money is now officially a criminal defendant. To get it back, you have to go to court and prove your money is innocent. The legal case isn't the people versus you. It's the United States versus $10,000. And the standard of proof for the government to keep your stuff is laughably low. They just need what's called a preponderance of evidence, which is a fancy way of saying more likely than not that the money is dirty. Meanwhile, you have to hire a lawyer and fight a legal battle that often costs more than the money they took. This beautiful system became wildly popular during the war on drugs in the 1980s, and it's been a cash cow for law enforcement ever since. Here's the really twisted part. The agencies that seize your property often get to keep a large chunk of what they take. It's like giving a fox a financial incentive to guard the henhouse. They're not just fighting crime, they're funding their operations by legally robbing people who haven't been convicted of anything. The real lesson? Carrying cash doesn't just make you a target for criminals. It makes you a target for the people who are supposed to protect you from criminals. The system can be designed to make fighting for your own property a losing proposition, and they've done exactly that. But wait, it gets better. Let's talk about the state lottery, which I like to think of as the tax on people who can't do math. But that's not quite right. It's actually a tax on desperation, and it's absolutely brilliant in its cruelty. What if the government ran a business that had almost zero chance of delivering what it promised, marketed exclusively to people who could least afford it, and then used the profits to plug holes in its budget? That's not a hypothetical. That's your friendly neighborhood state lottery. Since New Hampshire launched the first modern state lottery in 1964, this system has perfected the art of weaponizing hope. The ads never show you the millions of losers. They show you the one guy holding the giant check, grinning like he just solved poverty with a $2 ticket. But the math is absolutely horrifying. Your odds of winning Powerball are worse than being struck by lightning while being attacked by a shark. You're literally more likely to become a movie star than to win the jackpot. Yet Americans spend over $100 billion a year on lottery tickets. Here's the really insidious part. That line about lottery money funding education? It's often a shell game. When lottery revenue comes in, states frequently reduce their education funding from the general budget. So schools see little to no net gain. It's a regressive tax system where the poorest citizens voluntarily fund a government program that offers virtually no return while thinking they're one lucky number away from freedom. The financial lesson is dark but important. Governments are perfectly willing to use behavioral psychology against their own citizens for profit. They know people in desperate situations are more likely to buy into long-shot dreams, and they've built an entire revenue stream around that desperation. Now, let's dive into something that hits closer to home for millions of people. The student loan trap. You were sold a simple story. Go to college, get a good job, live a better life. The government even offered to help by backing student loans to make that dream accessible. But they weren't just opening a door, they were setting a snare. Starting in the late 20th century, the federal government essentially became the co-signer on an ever-increasing mountain of student debt. Lenders, knowing the government would cover their losses if students defaulted, had zero incentive to care whether an 18-year-old was borrowing $150,000 for a degree in medieval poetry. They literally could not lose. Universities, seeing this flood of guaranteed money, jacked up tuition prices at a rate that makes regular inflation look tame. But here's the most sinister part of the whole scheme. In 2005, a bankruptcy reform bill made it nearly impossible to discharge student loans in bankruptcy. You can bankrupt yourself out of credit card debt, medical bills, even gambling losses. But that student loan will follow you to the grave. They can garnish your wages, seize your tax refunds, and even take a chunk of your Social Security when you're 70 years old. The government created a special class of debt from which there is literally no escape. It's a masterclass in public-private partnership hell. The government guaranteed the risk, the schools grabbed the cash, the banks collected the interest, and you got stuck holding the bag for the rest of your life. You weren't just given a loan, you were given a permanent financial ankle bracelet, ensuring that a significant portion of your future earnings would always belong to someone else. Speaking of your future earnings, let's talk about Social Security, which is basically the world's largest Ponzi scheme. Except when Charles Ponzi did it, we sent him to prison. Here's how this particular scam works. For decades, Social Security took in more money from workers than it paid out to retirees. What happened to that surplus? Did they invest it wisely? Did they put it in a high-yield account? No, the government borrowed it to pay for other things. Wars, infrastructure projects, tax cuts for people who definitely didn't need them. In exchange, the Treasury Department issued special non-tradable bonds to the Social Security Administration. So the trust fund isn't filled with cash or investments, it's filled with IOUs from the government to itself, payable by future taxpayers. This is like taking all the money out of your kid's college fund, spending it on a new car, and leaving a sticky note in the empty account that says, "I owe you $50,000. Love, Dad." The government spent your retirement money decades ago and is now counting on your children and grandchildren to make good on promises they never agreed to. It's a demographic time bomb wrapped in an accounting fantasy, and it was set by the very people who promised to secure your future. Government accounting operates in a magical realm where borrowing from yourself to pay current expenses counts as sound financial planning. But let's say you manage to navigate all these financial landmines and actually buy a house. Congratulations, you're now a long-term tenant, and the government is your landlord with unlimited eviction powers. I'm not just talking about property taxes, I'm talking about eminent domain, the government's power to forcibly buy your property for public use. Historically, public use meant things everyone could agree on: highways, schools, parks. But over the last half-century, the definition has been twisted beyond recognition. The whole perversion was put on full display in the infamous 2005 Supreme Court case, Kelo versus City of New London. The city wanted to bulldoze an entire middle-class neighborhood, including one woman's little pink house, to make way for a private development supporting a new Pfizer research facility. Their argument? The new development would generate more tax revenue, and increased tax revenue counted as a public benefit. The Supreme Court agreed. So the government can literally take your home and give it to a wealthier, more politically connected private developer, all under the banner of economic development. Your property rights are only as strong as the profit motives of those with more political influence. They'll pay you fair market value, but that never accounts for the cost of uprooting your life, your community, and the memories built within those walls. It's a perfectly legal way to transfer wealth from individuals to well-connected corporations, with the government playing facilitator and taking a cut in the form of higher property taxes. Now, let's talk about something that affects anyone trying to start a business or change careers. Occupational licensing, which I like to call permission slips for capitalism. Want to earn a living? Get in line and prepare to pay up. In our supposedly free market, governments have created a jungle of licensing requirements for everything from hair braiding to interior design. Want to be a florist? In some states, you might need thousands of dollars and hundreds of hours of state-mandated training. These rules are sold as consumer protection. And for some professions like doctors or pilots, that makes sense. But for most jobs, it's pure protectionism. This is a modern version of medieval guild systems. The people already established in an industry lobby the government to create absurdly high barriers for new competitors. This keeps supply artificially low and prices artificially high. It strangles entrepreneurship, especially for lower-income people who can't afford the time or money to jump through bureaucratic hoops. The government isn't protecting consumers from bad service. They're protecting established businesses from competition that might charge lower prices. It's regulatory capture in action, where the industries being regulated are actually writing the rules. You end up paying more for everything from haircuts to plumbing because competition has been legally eliminated. The lesson here is simple. When the government creates permission requirements for basic economic activity, they're not protecting you. They're creating artificial scarcity that benefits the people who already have licenses at your expense. Which brings us to perhaps the most infuriating example of how this whole system works. The doctrine of too big to fail, or as I prefer to call it, socialism for the rich, capitalism for everyone else. Here's the fundamental rule of our modern economy. When you make bad financial decisions, you go broke. When a trillion-dollar bank makes decisions so catastrophically stupid they threaten to burn down the global economy, you pay to fix it. The 2008 financial crisis was the ultimate demonstration of this principle. Banks spent years gambling with toxic mortgage-backed securities, fully aware they were building a house of cards. When it inevitably collapsed, they didn't face market consequences. They got bailouts. The government used your tax money to shovel trillions of dollars into insolvent institutions. The same politicians who lecture about personal responsibility and free market virtues suddenly became full-blown socialists when their Wall Street friends needed help. The profits had been privatized and distributed as multi-million-dollar bonuses for years, but the losses were socialized and dumped on taxpayers. Millions of people lost jobs, homes, and life savings, while the architects of the disaster were deemed too essential to fail. They took your money to fix a problem they created, and in the process, they cemented a system where the biggest players know they can make any bet because if they lose, the government will force you to buy them a new casino. The financial lesson is terrifyingly simple. There are two sets of rules. There's brutal, unforgiving capitalism for you and your small business, where one mistake can be fatal. And there's a cozy government safety net for financial elites, where no amount of greed or incompetence is too great to be rewarded with a taxpayer-funded rescue package. So here we are, at the end of our tour through the government's greatest hits collection of financial manipulation. You've seen how they devalue your money through inflation, seize your property through civil forfeiture, tax your desperation through lotteries, trap you in permanent debt through student loans, raid your retirement through Social Security's sleight of hand, steal your home through eminent domain, license away your economic freedom, and privatize profits while socializing losses. But here's the thing. Understanding these systems is the first step to protecting yourself from them. Follow the incentives, not the rhetoric. Watch the money flows, not the speeches. Remember that demographics, energy costs, and basic math don't care about political slogans or campaign promises. The government has become your most expensive subscription service, and unlike Netflix, you can't cancel. But you can at least understand what you're paying for and why the bill keeps going up. The system isn't broken. It's working exactly as designed. The question is, what are you going to do with that knowledge? Because once you see the machine, you can't unsee it. And maybe, just maybe, that's the beginning of building something better. If this deep dive into institutional pickpocketing helped you see the game a little more clearly, subscribe to Chill Financial Disasters for more brutally honest breakdowns of how the modern economy really works. Next time, we're diving into how central banks turn themselves into the world's largest casino, and spoiler alert, you're not the house. Until then, keep your receipts, question everything, and remember that in the game of modern finance, The most dangerous assumption is believing the rules were written for your benefit